All right, so welcome back to the channel. It's your boy King Quasi. I got a good one for you today. But before we get started, I want to remind you, I'm not a financial advisor. I'm just the king trying to build generational wealth for my family and myself. So if you like what we talk about today, make sure that you stop by and you come back in and you are hitting that like button if you haven't done so, and subscribe to the channel so that you get all the notifications. And if you have questions for me, post it in the chat. Feel me? So let's get right into it today. Today I wanted to talk to you about some of the things that are affecting our stocks. I just got off the phone with one of my boys, and he was so distraught. He said, I lost $1,000 on my Roth, and why would I want to buy my stocks when it's going down? So we had a conversation. So I wanted to kind of give you a perspective about what's going on in the market and in the economy around the globe, around the world, that's negatively affecting our stock prices. And so the more information you have, the more level your head will be to make some informed decisions. So let's get into it today. The first thing that I wanted to talk to you today about is inflation. Now, inflation is a rapid increase in prices for goods and services. So I want you to think, the last time that you went to the grocery store, did you feel like you paid an arm and a leg? How about the last time that you went to the gas station? Yeah, the prices have been inflated. The prices have been going up sharply over a short period of time, and that is what's negatively affecting our stock prices. Now, why is that? Why is inflation so rampant? Well, remember, during the pandemic, the government gave us a bunch of stimulus checks, and those checks were meant to circulate back through the economy once things open back up. However, what was happening is that a lot of people were saving that money for rainy day, kind of like increasing their rainy day funds. So they were saving that, and they weren't really circulating that money back into the economy, and that led to some inflation pressures. We also have supply chain issues. Now, I want you to think of supplies as they move around the country as a system. One strain on the system can affect the whole entire system. Because of rapid gas prices, because of places having to shut down, we have ships that were stuck at sea, we have ships that are stuck in the dock and with a bunch of products, and they haven't really been getting out there to manufacturers and to stores. And so that's causing some issues, because let's say, for example, my phone. There are many components that go into my phone. And so if the company that makes my phone don't have all of the components, like the screen, the chips, the cameras, all of those things, the batteries, if they don't have those things, then what's going to happen is that they can't fully assemble this phone. And if they can't fully assemble this phone, now there's going to be a shortage of shelves when we go to the stores. And so supply chain issues are affecting inflation, and inflation is affecting supply chain issues, but essentially everything around us and our stocks. Now, in a recent earnings call, supply chain issues was one of the number one factor that companies cited for why they were not meeting their estimates, right? Their projected growth over the quarter. Supply chain issues were the number one cited reason for why that was the case. And so that's bringing our stock prices down, because a lot of people that buy these companies, and the companies are not performing the way that they're supposed to be performing, or the way that we would expect them to perform, and that is bringing the stock prices down. Additionally, when we have the inflation, now we have less money that's really circulating, less money to buy stocks, and so that's also bringing our prices down. There's that fear that dominates the market, right? Now, if prices keeps going up, continue to be fearful of investing their money, because they don't know if they're gonna have enough money for their necessities, right? Their bills and utilities and their the things that they really need in order to live a quality life. And then we also have as a way to address the inflation issues, we have the feds that are going to be making some decisions about how to raise interest rates. Now, interest rates is one way to bring down inflation when it is rampant, but interest rates in the short term really pulls down on our stock prices, because I want you to think about this. If banks are charging more for loans, and that means that your credit cards are also going to be increasing, particularly if you have variable interest rates on your credit card. Now you're going to be paying more money on those interests than you would be using to buy goods and services, and also money to be investing in the stock market. So we have to wait until March 16th to figure out just how much the federal government is going to raise interest rates. But that is a way to combat inflation, and as a result, it is bringing down our stock prices because there's fear in the market. So do not be fearful. Warren Buffett says that when those are fearful, you should be greedy, and when people are greedy, you should be fearful. And so right now, it's a time where you should be greedy because there's so many fears in the market. And this is the time where you should be loading up on your stocks, those quality stocks. Load up on those stocks for the long term. All right. So listen, thank you for coming back to the channel. Just wanted to give you that little update on some of the things that might be affecting your stock prices. Don't forget to hit that subscribe button, that like button, comment down below. And wait, I forgot. I know you saw the merch, feel me? So that's a check merch. It's going to be coming to you very, very soon. I'm working on it, but hit that like button before you get a check. All right, see you later.